now. So Money Mondays, Monday.
Money Mondays, right? Every Monday at what time?
3:30 Central.
Ooh, all right.
Speaking of Monday, our buddy Kevin, me and him were texting about golf, and he randomly signed me up to get, advice to get registered for lessons. I should get registered for lessons because I don't know anything about golf, but didn't mean to get sidetracked.
All right. Well, hey, nothing better than a Monday.
Well, I figured I can't be in real estate without knowing how to play golf. And for those that know me,
have you ever played before?
Yeah, Top Golf.
Okay.
Well, played several times. No, that's about it. Never been on the green. I've been to a driving range twice, and might as well have never been.
We'll get you out there, buddy. We'll get you out there. I actually like playing golf. It's just one of those things I haven't been able to do for a while. Yeah. Thanks, COVID.
Yep.
But we're talking real estate today, man. So what are we talking about?
We are talking about the biggest mistakes new real estate investors make.
Ooh.
And there are a lot of mistakes, and I like to tell people. We
could probably talk about this for like an hour if we really wanted to.
Yeah, and I like to tell people it's okay to make mistakes. It's about making mistakes that aren't going to kill you.
Well,
big difference between the two.
That, and I'd say the other piece of advice is everybody's going to make a mistake, right? It's that you learn from it and you don't make that same mistake again, right? Because there's always going to be challenges, things that you overlooked or didn't realize were going to happen.
And the mistake that Ben always makes is not learning from his previous mistake. So he should learn from his mistake of a previous mistake. All right. I'll leave it at that.
Nah. All right, we're going to get into this, folks, because there's plenty of these to go around. And once again, we want this to be interactive. So for people that are tuning in, Facebook, LinkedIn, Instagram, drop a comment in there. Let us know some of the mistakes that maybe you've heard of, you've done. If you want to be, transparent about the whole thing, I'll probably try to sprinkle in a story or two about some of the mistakes that I've done. So all right, the biggest ones, right? So I always love this one. This one's also kind of coming in. It's rearing its ugly head this last 6 to 12 months since COVID popped up. Is this the right time to invest, right? There's never going to be a perfect time, right? If I knew the perfect time, I would time the market every single time perfectly, and I probably wouldn't be on the show because I'd be a billionaire living on my own island.
And actually, right? I would say while real estate is cyclical, it's actually still similar to stock market. In the sense that time in the market is better than timing the market.
Ooh, I like that. Did you make that up?
Yeah, I made that up. No, actually, that's a very famous phrase. And it's very true, right? Because, the assumption with stocks, right, is stock market's continuing to rise. And, yes, there's dips and falls and it crashes. But, in general, the economy grows, right?
And one thing that Warren Buffett even pointed out, or maybe it was one of where if you kept your money in the market, even during 8, 9, and 10, right, you're ultimately going to make more money than if you tried to top the market out and then sell, right, and then buy on the dip. It just doesn't work like that, right? Nobody can perfectly time it. So just keeping yourself in the game is probably the best thing you can do.
You all heard it here first, so I'm sure in about a month from now, Ben's going to be using this phrase every other chance. But no, so with real estate, though, I like to say it's actually more powerful because with real estate, the thing you get with timing is it pays down the note over time.
Yes.
So that itself fixes itself, right? I mean,
plus
any deal could work if I hold on to it long enough, right?
Yeah.
Even if I buy a deal and it just doesn't cash flow. Let's say zero breaks even every single month. Guess what? If I hold on to it until that loan gets fully paid off, I now own that asset free and clear. Yeah. So even though I didn't make any money, I still made money, right? It fixes itself. And so, it's an important thing to realize, I think, with people.
No, I agree 100%, right? So don't just try to time it like, is 2021 the right time to hop in the game, right? People literally said that there was a top in the market since I started investing in multifamily in 2015. They're just like, cap rates, I've never seen an 8 cap before. I've never seen a 7 cap. Like that was the craziest thing. And now cap rates are 4, 5, and 6, right? And the market, still hasn't really tanked. I mean, obviously it was a rough year for multifamily, I'd say in 2020,
and I like to tell people,
but we ultimately fared better than a lot of the other asset classes too.
And real estate is different in different markets. So
meaning
it might be down in one place, but guess what? There's somewhere that it makes sense to buy. So don't feel like you're just going to always sit on the sideline. If you don't think that market that you're looking at is a great place to buy, don't just sit around and say, I'm going to wait another 2 years. Go find another market. There's millions of markets out there.
Yeah,
right. Don't get caught up in just sitting around.
That's a good mistake that people I think make. Right, is they're waiting for the perfect opportunity in their backyard. Right, and they need to realize that might not ever come. Right, we didn't look in Houston for quite some time because it just wasn't the right timing. Right. And now we're starting to look there, but there's some other more macroeconomic things that are happening here, and that's the reason why we're now looking in Houston. So, I mean, we went to other places like San Antonio, like Atlanta, right? You have to kind of sometimes look outside your backyard, and I think a lot of people make that same mistake. I want to be able to get over there and show my wife or show my husband or show my kids, blah, blah, blah. That's all great and fine, but it might just take you a lot longer to find a deal, right? So, that's why a lot of people in California invest in Texas.
Absolutely.
Right? But they still live in California. Yeah. Anyway, all right, so that's probably one of the bigger mistakes that people make.
So before we keep going, Mondays, there's every Monday, 3:30 Central, right? Basically, we'll spend about 15, 20 minutes talking about different topics. This week, we're talking about the biggest mistake new real estate investors make. We'll spend the last 10 minutes, 15 minutes talking about Q&A. So if you have comments, questions, go ahead and leave a comment, and we will answer them live. Ronnie says, what's up? What's up, Ronnie?
Ronnie, what's up, buddy? All right.
Ronnie is the clubhouse king, I heard. So
no, I heard he is Kingpin and Clubhouse. You got the. I want to show. I need an
iPhone.
Yeah, when I see it in a couple days, man, I want to see what this thing's all about. I've never even been on there. I got an Android, right? I'm a slacker, dude. I'm a slacker.
But let's keep going.
All right, so
number 2.
Analysis paralysis.
What does that mean, Ben? What does that mean?
And I see this. This is probably one of the bigger problems.
This one's really popular.
And it's so frustrating for me because I just wanted to shake people, right? They get so caught up in the what if that they never actually pull the trigger, right? They're, what if rents don't go up by 4%, they go up by 2%. If they go up by 2%, then my deal's not going to work, right? They pick apart their own deals and their own analysis, and they ultimately compound the problem, right? They're going to say, vacancy is going to go up, and my rents are going to go down, and my reversion cap rate's going to go up. All of these bad things that never happen in conjunction with each other, right? Ultimately are going to blow up any deal. But that's how they usually pick their own deals apart. They're so caught up in their head and what could potentially go wrong, they talk themselves out of every single deal.
Yep.
Right? And I can literally judge somebody within 2 minutes of talking to them if they're going to be a tire kicker. And I'm not saying that everybody that has analysis paralysis is a tire kicker, right? Or if they're actually going to take action and go out and make things happen, right? Once again, you're not going to know all the variables. You will make mistakes.
You will make mistakes.
There is risks.
It's just about not...
You got to mitigate those.
Not killing yourself.
Yeah.
That's where partners come in. That's where go and get educated, listen to podcasts, go sign up for training, whatever it is that makes sense for you. But know enough, right? But don't know too little to just get killed, right? And so...
All right, I'll go with that one.
Ben's going to use that one in about a month as well.
Give me 6 weeks on that one.
But no, it's the truth of it, right? Get out there, learn. I'm a big person of just listen to podcasts, read a lot of books, know enough of how things work.
Yeah.
Find a person or two to kind of help you and go out there and get things done. You will make mistakes. You will have less capital than you may need. You will overpay a vendor. You will hate. I mean,
you might even
all
overpay
of these things
for a property too.
But it's about knowing. Okay, I may overpay for property. How do I mitigate killing myself? Well, go with less leverage, right? That's an easy way. If I go very low leverage, I'll never not be able to pay the note. That's an easy one, right? Now, that'll impact your returns, but again, it's okay to make less returns. It's not okay to get killed.
Yeah, it's all about mitigating that risk, right? There's always an inherent risk in what we do. And that analysis paralysis for people that don't really know, that is, people are just crippled by what could go wrong, right? Instead of actually taking action, right? So I always thought, ready, fire, aim, right? And what is that? It's a Tony Robbins-esque quote, and that means just get into the game. You can adjust and figure it out along the way, but you've got to take action. You have to have some forward momentum, and momentum in this game is one of the most important things, right? So, analysis paralysis. You never get started, you're never going to get anywhere. Rushing into a deal without completing thorough due diligence. So there's a balancing act, right? You don't want to be hamstrung by not doing by analyzing the hell out of the deal and not doing anything. But you also don't want to be, let's just, not underwrite anything and just throw lob offers in there, whatever happens, right? There has to be a happy medium there, right? And some people will not do enough due diligence or thorough due diligence, and they're just lobbing offers in there and hoping for the best, and ultimately they're going to get burned, right? Yep. So that's a big mistake that we see, right? Playing the short-term game, right? Kicking tires. I think, there's a lot of people that just kind of, they maybe do this, let's throw an offer in once a month, right? At the end of the day, you're not committing to doing anything. You're just kind of nibbling around the edges. You're just kicking tires, right? You have to commit to this business in order to have enough deal flow and enough offers going in to actually win something, right? You're looking at 100 deals to find one that you're going to probably close.
Yeah.
So
and realizing that, and again, put a plan in place, right? It's not a passive thing. I mean, if you want to be a passive investor, great. If you want to be an active investor, which I think a lot of the people that are watching this probably are, it's not a very passive thing. And so it's about getting out there, talking to brokers, making offers, finding out what you like and what you don't like, figure out what the match is. And it's just kicking tires. I think a lot of people find it attractive to say, hey, I'm going to buy an apartment complex.
Yeah, it's a status symbol or whatever.
Yeah, but really it's more about getting out there, putting a plan in place, and just executing, right? And this is where you put goals. Hey, I'm gonna underwrite 20 deals every week, period. Even if I can't find a deal, I'm gonna go out and find a deal, right? That's a goal. Now, maybe you do that for a while and you realize you're not getting anything because you're not submitting offers. Well, then you readjust your goals, right? But it's not a short-term game. It really isn't, right? Don't be a tire kicker. Keep kind of getting out there and taking proactive steps to
make is that they think that they're smarter or they've got enough money or they got enough time to do it on their own, right? Or they're looking at it from very short-term perspective, right? Where they're saying, well, if I can just have more of this pie on my own, then I'm going to get richer quicker, right? But we've run the numbers. It doesn't work like that. You take a bigger pie and a smaller slice, and you're going to be more wealthy in the long run, right?
It's a team sport.
It's a team sport. You're leveraging not only people's money, their experience, but their time too. That's the most important thing that people don't they take for granted, right? Is time. You can't get that back, right? You can always make more money.
And ultimately, by doing those things, it helps you avoid making the mistake that will kill you, right?
Yeah.
You make mistakes, it happens, right?
No, and
so
we've
it's a
done
team
this too.
sport, right? And it's just, I mean, I might have made a mistake with my partner, but here I am, and we've been able to build the company we are, right? No, it's not. I mean, it really is a team sport, right? If I didn't have a partner, we wouldn't be anywhere near where we are today, right? It's very easy to have that short-sighted mentality, but understand it's about having immediate partners. It's about having secondary partners. Maybe I guess let's call them exclusive primary partners, right?
Well, yeah. What we've done is a little bit different. Than some people are going to have deal partners, right?
Yeah.
And some people are going to have actual business partners, like what me and Ferris are, Disrupt Equity. And then you're going to also have other people in your team, right? There's going to be vendors, right? Having the right lawyer on your team is important, right? Having the right CPA.
Yeah.
These people will keep you out of trouble, right? These are some of the big mistakes that people, let's get that low rate, lawyer in here.
Yeah, don't cheap out on your partner.
$50 an hour, and he's gonna be able to put my PPM together. Guess what, guys? You guys are setting yourself up for a big problem, right? Pay the extra money and get the right team members in place too when it comes to vendors. That's probably one of the bigger things that people make mistakes on, man. So some of the things that we have seen, what am I missing, man? I know that there's plenty more.
Mistakes people make. I mean, let's talk about the process, right? So maybe here's a good one. Trying to get greedy and on a specific deal. And what I mean by that is the brokers control the keys, whether you like it or not, right? You might think you're being sly, saving a quick buck, trying to do a retrade for something that's BS.
Yep.
Yeah, maybe you saved the quick buck, but that broker's probably not going to want to partner with you again because they are a partner. So again, don't try to BS your way just to save a quick buck because trust me, word gets around. The people that are just wasting people's time and trying to save a quick buck, no one enjoys that, right? Be a man of your word, be honorable, and really treat that relationship with the broker really highly, right? It's an important relationship. So I think that's one people make, right? People that finally get into a deal, they're like, all right, I finally got a deal. I'm gonna, the trees on this tree, the leaves on this tree are not green enough, right? Like, come on,
I want
that.
$50,000 off, right?
I think that's a big one.
Yeah, no, there's tons of them too, right? I would say one of the biggest mistakes that we had too was not understanding two parts of the process, right? The financing and the insurance piece. We're starting to educate ourselves with our partners, right, on this at Peak Financing and Strategic Insurance Group. But you have to understand how financing works, and you have to understand how insurance works, right? Because if you get the wrong loan or you get the wrong insurance, that could be detrimental to your deal, right? You ever talk about giving the keys back to the bank, which happened plenty of times in 8, 9, and 10. It's because people were over leveraged. Right? And so you need to have a partner on your team that understands how financing works and make sure it gets you the right loan for the right deal, right? Same thing with insurance, right? You're going to try to skimp a few bucks and save some money on your premium, but what you're not being told is that your deductible is 5%, and that 5% equates $1 million. So you're self-insuring that property. Do you have $1 million in your bank account, or does the operating account have $1 million in it? Most likely not. So if you have that hailstorm or that windstorm and it comes in and you've got $2 million in property damage, guess what? You're paying $1 million out of your own pocket. Some of this stuff we took for granted when we started off, right? Yep. We didn't know what we didn't know, and we've since educated ourselves on these very, very important parts of the process, right? I would say one last thing too, because it's bitten us in the butt plenty of times, is picking the right property management company. Doing your due diligence on those companies, right? Talking to referrals, right? Understanding their understanding of the market and how they're looking at rent growth and how they're looking to control expenses. and ultimately getting comfortable with them, because they essentially have the keys to your deal in a lot of ways, right? Depending on how it's written up in the property management agreement, they have a ton of power over the if your deal is going to be successful or if it's going to be a total dud. Right? So understanding that and ultimately going and picking the right vendor for that too is probably one of the more important things.
Yeah, I'd say a similar one too is maybe understand who you're buying from. That's probably another big one,
That's a good one.
Like, understand who you're buying from. The seller will help you understand how you're going to run the property and what to expect. We've learned that the hard way, right? Where you buy it from.
Let me give an example. That's actually a great one, right? So I won't name the property, but the seller, they're a big firm. They had 50 deals or so, here in Texas, and we bought a deal that they'd owned for 10 years. We knew it looked tired, right? But as we came to find out, they were pretty much a step above a slumlord. Right? They had pretty much put a Band-Aid on every major mechanical thing at that property. And when we took it over, we had a ton of CapEx built in. I think we had $5 or $6 grand per door. Yep. I mean, it was a big CapEx budget, but it wasn't enough, right? Because these guys had run it into the ground for the last 10 years. So understand, are you buying it from these guys are legit, they had 50 properties, but how do they maintain properties, right? Get an understanding of who the seller is, right? Because there's some sellers that take care of their properties and have a pride of ownership, and there's some guys that are going to squeeze every last penny out of it and leave you holding the bag, right? And that's ultimately what ended up happening on this deal. And so from here on out, we really take a very hard look at who we're buying deals from, right? And are they a legit firm, and do they maintain the property? It's important.
I totally agree.
What
else are we missing? Other mistakes people make. Let's see. So if anyone has, Money Mondays, we do this every Monday, 3:30 Central. We spend the first 20 minutes or so doing presentations. We're talking about mistakes new real estate investors make. If you have mistakes, things that definitely go ahead and leave them in the comment. We'll talk through them. But other things that we've seen, what else?
I was going to say, just to drill down on a point that you brought up briefly earlier, which is you need to get yourself educated, right? Now, we're not advocating formal mentoring or coaching, but if you feel like you needed that, and then go out and make it happen. There's plenty of groups out there. I did the same thing. He did not, right? So it's all in the eye of the beholder if you feel like you need that, right? Yeah. But you need something. You can't get in, and also you can't say, well, I'm going to get it just by having an experienced partner, right? What if that partner is skimming off the top or doing something fraudulent? You're not going to know, right? So you need to have some basic understanding of how the logistics of this whole thing works. There's so many moving pieces, and you need to understand that. So you need to get some level of training. And luckily with the internet and everything that's online now, there is a ton of free or low cost content on there, but you got to start somewhere, right? Read a book, listen to a podcast, be on a webinar, talk to people that are doing deals, understand the mechanics of it, because you're not going to be able to go out and buy this deal. And really, your lender will never lend to you. You'll never have any investors, because they're going to know that you don't know what you're talking about, right? So have some basic knowledge. That's probably, educate yourself is probably the biggest mistake that we've seen, where people they got more money than sense. Literally, people that might have $1 million in the bank and they think they can just roll in and start buying deals. And maybe they can get 1 or 2 deals across the finish line on their own, but it's probably gonna burn up, and because at the end of the day they don't know what they're doing, right?
Yeah. What else are we missing? What else? Other mistakes people make. Actually, another one is kind of similar to what you said earlier. It's you have a property manager, but also manage the asset manage. Don't just lean on the property manager with everything.
No.
Go learn how to be an asset manager. Take a look at understand what's happening at your property.
Yeah, and that goes back to getting yourself educated. Know what is involved in being an asset manager, so you can look at the financials correctly and know where you need to push some levers a little bit, right?
The property management company is a resource. They're there to manage the people, but also ultimately you as the asset manager, the owner, you're the one driving the ship.
Yeah.
They help run the staff that's there, but if your ship staff is working the wrong side of the ship, or you were going to do a casino party and instead they did another type of ship party, that's your fault, right? Yeah. Help lead that charge. So that analogy didn't go so well.
You were doing better earlier, but no. But I
wanted to see if Ben's going to end up using that analogy. I know
I'm going to let that one pass. But the point is, folks, is that you need to know what's going on with the property, because ultimately the buck stops with you, right? So we could sit here and say, we've never made any mistakes, but that's a bunch of crap. We absolutely have. But as anybody knows us and knows our reputation, we will fall on that sword and we will admit fault, and then we will come up with a plan to make it better, right? And and we've ultimately had to do that, right? We're not going to sit here and just say, we've been rock stars on every single deal that we've ever done. That just doesn't work like that, right? Absolutely. So understand that mistakes are going to be made. Just don't make them twice, right?
You'll be good
Learn
to go.
from them, right? And that's probably the biggest takeaway from today's show. So we got some Q&A. Anybody got any questions
if anyone has
for
any
us?
comments, questions, go ahead and leave them in the chat box. So let's see. So Jefferson, Ronnie said he'll teach you when you hang out this week. Great. We'll see you Wednesday. Jefferson says, happy Monday, Ben and Ferris. We have lots of snow here in New Jersey. We can bring some there in Texas.
Oh, whoa,
Too much snow.
dude, whoa.
And then he said, that's a great point about the deductible on the insurance. Yeah. There's a lot of little gotchas that you learn over time.
We didn't know that when we were starting off, right? We had to get educated on this stuff. But luckily, none of that stuff burned us, but it could have.
Yeah,
I
absolutely.
mean, you have to get educated on all these different pieces.
So one more comment from John Montero. Big mistake, not understanding your investment/deal box. Otherwise, you'll be chasing every shiny penny on too many bad deals.
I love it.
Very true.
That's why we're friends with you, John.
Define your criteria, right? I think it's just a little bit of everything. And even us, we'll do different things, but our box, there's different boxes for each type of deal. Because again, like John said, there's a lot of stuff out there. And if you're too vague, you end up getting desperate or you end up getting overwhelmed. One of those two things will probably happen. And honestly, the brokers won't think of you because your box is everything. Versus if I know you're the only guy that will buy a green shoe, right? Like speaking of another analogy, right? I have a great analogy. If I know Ben's the only guy that will buy green shoes, guess what? The next time a green shoe comes to the door, I'm gonna think of Ben as the first guy. Right? Versus if Ben's like, I'll take any shoe. Well, if a green shoe comes to the door, I'm not going to think of Ben. I might think of some whoever, right?
Yeah.
So that's kind of maybe the similar analogy, right? Have a very clear box because it also helps the brokers remember you, helps the brokers source something specific for you.
No, and I'm big on not taking a shotgun approach when it comes to acquisitions, right? You can't be like, hey, I'll look at anything over 100 units in Texas. Well, that's a pretty big box. Right, and you're like Ferris said, you're going to get overwhelmed, or you're just ultimately never going to get a deal across the finish line because you're too vague, right? So know what that is. Stick to your guns, right? And unless there's just a smoking hot deal that maybe falls a little bit outside your box, that might be all right. We're opportunistic too, so it's not a rigid box, but it might be able to expand a little bit. But beyond that, don't go chasing that crazy deal over there because somebody said it was 20% returns, right? When you should be staying in your lane a little bit. I think that's a big mistake that especially when people are starting off. Oh my gosh, I remember when I got into real estate, man. It's like just getting blasted in the face with a fire hydrant, right? There's just so much information, so many directions that you could go that you're just chasing all these different opportunities in real estate. And I'm surprised I even stumbled my way into multifamily, but here I am, right? Which is a niche within a niche.
Absolutely. So let's see. So if anyone has any more comments, questions, go ahead and leave them. We're happy to talk to them. Monday, they do this every Monday, 3:30 Central. Talk about a bunch of different topics. Today we're talking about mistakes real estate investors make. But one more and then we'll move on. So Trevor says Ronnie is the king of Clubhouse. Absolutely.
He is. He's the king.
But what else do we got for people, Ben?
And what's next? We've got our toolkit, folks, right? Well, we've talked about this several times in the last couple shows. This is where we're consolidating all of our stuff, all of our checklists, all of our webinars, all of the podcasts. Everything's in this toolkit. We're not trying to sell you anything. Go to www.disruptequity.com/toolkit and check it out. All we're going to ask for is an email.
Yeah.
Not selling you anything, right? But on this slide, I am going to try to sell you something. I'm going to try to sell you.
Yeah, so what's coming up, Ben, in 3 weeks?
2 weeks, we got our
19 days.
Infin Conference, Multifamily Investor Network coming up here in Houston, right up the road from where our studios are. But this is the last call. So put in coupon code.
Yeah, we sold out the VIP already. We're very close to selling out the rest of it.
We've got 20 spots left, right? We're trying to kind of keep it COVID safe, COVID compliant, right? We're not trying to bomb it out like we did last year, 400
people. The mayor of Houston. The mayor of Houston will not come out this time, but maybe next year.
Yeah, he's got some appearances he's got to keep up, right? But at the end of the day, it's gonna be a fun conference. We got Robert Hounds, we got Mark Kinney, we got a bunch of panels, we got a bunch of breakouts. People can learn a ton of stuff, and they can ultimately find those partners and those team members that we were talking about earlier.
Yeah.
So what's the URL here, man?
www.mfinvestornetwork.com. Use the coupon code last call. So we are expecting that we'll sell out this week. So I'm excited. We definitely hit all of our metrics.
This is not a sales pitch,
we're having a lot of
folks.
interest. So a lot of speakers. It should be awesome.
I think there's a lot of pent up demand. Obviously, we have a pretty big following here in Texas, so it's not hard for a lot of people to come in from Central Texas or Dallas.
And for those of you that can't make it, John Montero, we'll let it slide this time, all right?
John, we're going to get you out to one, buddy. One of these days. But no, we appreciate it. John always helps us support that.
So we had one more question come in. So Seller self-managed the property for 16 years, has literally done what you just described, squeezed the prop, deferred maintenance, repairs, and more. Do you have any tips to renegotiate based on what we found?
I mean, yeah. I mean, if you have a legitimate, where because you're doing a property tour, right? They're gonna manicure the way that you do the tour, and if you weren't able to see it, right? If the thing was falling apart or the roofs needed to be redone, right? Then you have a legitimate reason to maybe potentially go back and do a retrade. Now, we don't use that often, right? Because that's a card that can piss people off.
The rule of thumb is if you couldn't see it or you're not the expert in it and it wasn't disclosed, you're probably allowed to renegotiate it, right?
Yeah,
and so
absolutely.
I would say in a situation like that, I would get every contractor under the sun out there. We've had a case where we had like 25 people out on due of day diligence, right? Dig into everything, get a good sense with it, and just get comfortable, right? Ultimately, if the deal works at a price, it works at that price. If it doesn't work, it doesn't work, right? So don't get desperate to do the deal, right? Make sure you have the price that you need to get all the things cured, get all the things resolved and moving forward.
But I mean, you typically, we're going to have a CapEx budget going into our acquisition, right? My thing is, okay, I got $1 million. If my CapEx proposals come back at like $1.5 million, $2 million, we got a freaking problem, right? Now, if they come back in $1 million and I just have to rejigger some things, then that's a different story, right? But when all the deferred maintenance and all these things that I didn't know and were not disclosed to me blow up my rehab plan, then we got a problem. We got a reason that we might have to renegotiate, right? The other thing too, you'll find out that there's way more vacants than were on the rent roll or were disclosed, right? So whenever you're doing your unit by unit walks, right, you find out that, hey, instead of 10 units on a 100 unit property, there's 40 units.
Yeah.
That's an extreme example, but you get my point, right? That would be something that you could say, hey, I made an offer based on 10 vacant units and you got 40. We need to renegotiate this thing, right? It's just called a retrade for people that are kind of new to the business.
I agree.
So.
And then Josh Benfrost is excited for Nth, and so are we. We'll see you there.
Yeah, buddy.
19 days. So with that said, Money Mondays do this every
already
Monday,
time?
3:30 Central, starting at 4 o'clock. So
Oh my gosh.
talk about a bunch of different topics. Today we're talking about mistakes real estate investors make. What are we talking about next week, Ben?
Oh my gosh.
And if you have any comments, questions, go ahead and leave them. We can kind of catch them before we finish up here. But next week we're talking about what?
Tips for building your business plan as a multifamily syndicator. So there's a lot of things that you're going to have to kind of understand and know. And, in order to kind of build a multifamily syndication business, you need to have a plan, right? And I think we'll kind of go through some of the tips and tricks and, some of the hurdles that we've had to kind of go over, right?
Absolutely.
So we're excited about that one.
So with that said, Money Mondays every Monday, 3:30 Central. We're going to go ahead and call it a wrap unless we get any questions in the next 5 seconds. Otherwise, we'll see you guys next Monday when we'll see a lot of you in not this Saturday, not next Saturday, the Saturday after at our
We're still going to have a couple Money Mondays before this.
MFInvestorNetwork.com conference, so we're excited. It's looking to be a good turnout.
Check out that URL. $150 off. That's a pretty good deal. We're trying to sell this thing out this week. So act fast, and we'll see you next Monday.